So here we are squarely in tax season. And one of the questions I get the most is how do I reduce my taxes when I'm a W 2 employee? Very, very common question. And there's no great solutions unless you own your own business. And then there's lots of different options for you. But there are a few pretty simple things we can go through and just talk about and make sure you're understanding the opportunity with them all. So the first thing is pretty obvious. It's your employer 401k, 403b, TSP, whatever that is. You can do a pre-tax contribution into that. It reduces your taxes. You're not paying taxes on the money you put in there. The limit is $20,500 this year, and it's going to also have a $6,500 catch-up contribution on top of that. That if you're over 50. So all in all, you could put up to $27,000 per person into that, all of which is not taxable income for you today. So that's option one or thing one. Number two would be an HSA. An HSA, your health savings account. These aren't the old ones that were spend it or use it or lose it. These ones can roll over. In fact, you can even use them in the future for Medicare premiums if you have the money in there all the way through retirement. That amount that you can put in there is $7,300 per year if you have an HSA eligible health employer health plan, and half of that if you're single. So family is $7,300. The money comes out, it's a deduction for you. It's either going to come out as a deduction from your employer's issuing directly, or you'll put it in and get a deduction that you'll see on your taxes. But either way, it's a deduction. Money grows tax deferred. And if you use it for qualified medical, it's all tax free. So they're pretty awesome. The third area that you can look into if you're a W-2 employee and want to minimize your taxes is using a brokerage account, a brokerage investment account or a joint account. That is a taxable account. And the way it works is it allows you to take losses and lock in your down times in investing. You can't do this in your retirement accounts, but you can in these types of accounts. And when you lock that in, it passes through losses that you can actually take against your ordinary income. So you can do up to $3,000 per year as a deduction to offset your investment losses. So that's a great option as well. A couple more ideas. Number one is a donor advised fund. If we haven't talked about donor advised fund, they're great. They're a fund that you put the money into today. You get the tax deduction today, and the money can be used for any qualified charity, any 501c3, and you can also invest it. So you don't have to give it out right away if you didn't want to. The reason you would use a donor advised fund, or the tax reason you do, is you're separating your giving and your tax planning. And it allows you to do what's called tax bunching, where you essentially double up on your charitable giving from a tax perspective every other year. So you would take a standard deduction one year, double up the next year. It's a great process and is a lot of tax savings if you are giving near what the full standard deduction is anyway. So we have another article on that, but it's great option for you as well. The last option, I'm checking my notes. The last option is a niche situation. So if you're still a W-2 employee and you find yourself still working and you're 70 and a half and you have an IRA account, what you would be able to do is you could give your charitable giving out of your IRA, and it would be a tax-free distribution that would go straight to that charity. It's called a qualified charitable distribution. If you are a W-2, whether or not you're working, you could do this if you're over 70 and a half, but it just so happens if you're also working, it still works. It's like a deduction while you're still working because you never have to pay taxes on that income. So that's everything I've got for you today. There's plenty more a CPA could always help with that are more into the weeds, but those are the main ones that we like to talk about. Please reach out with any questions and if anything that we can help you with. Take care.